What if I told you that one of the most powerful blockchain companies in the world is not just building technology, but is actually helping shape the future rules of crypto with the United States government? And what if that company is the same one behind XRP? Because right now, something very big is happening behind the scenes. Ripple is not just working with regulators. Reports are showing that Ripple representatives are actually sitting in discussions with top political leadership in the United States, including conversations connected to Donald Trump's team about the future of blockchain regulation. At the same time, we are seeing new developments involving the DTCC, one of the most powerful financial clearing institutions in the world, and new lending protocols being developed on the XRP ledger. And if you understand what all of this means together, you start to realize that XRP might be positioning itself to become a core part of the next financial system. Welcome back to the channel We Are Cosmic, where we break down the biggest developments in cryptocurrency, blockchain technology, and the global financial system in a way that is simple and easy to understand. If you enjoy learning about crypto at a deeper level and want to stay ahead of the market, make sure you support the channel and stay with me until the end, because today's update is packed with information that most people are completely missing. Now let's start with the biggest headline. For a long time, people in the XRP community believed that Ripple was working closely with regulators and governments. But recently, we received confirmation that Ripple has been involved in high-level discussions about how crypto regulation should be designed in the United States. In fact, there have been roundtable discussions where crypto leaders sit together with political leaders to help design the rules of the road for blockchain technology. Think about how powerful that is. When regulations for crypto are being discussed, Ripple is not outside the room waiting for decisions. They are inside the room helping shape those decisions. And in the world of finance and technology, being inside the room where policy is created is extremely important. You can build the best technology in the world, but if governments and financial institutions do not adopt it, the technology will struggle to reach its full potential. Ripple clearly understood this early. Instead of only focusing on building software, they focused on relationships with regulators, governments, and financial institutions. And that strategy may now be paying off, because when major policy discussions happen between the United States and other countries about upgrading financial infrastructure with blockchain technology, Ripple representatives are often present in those discussions. Whether it's regulators, central banks, or political leaders talking about digital assets, Ripple is frequently part of those conversations. That alone puts Ripple in a very unique position compared to most other crypto companies. Not many blockchain projects can say they are regularly involved in discussions with presidents, prime ministers, regulators, and major financial institutions. These are the rooms where decisions are made about how the future financial system will work. And if your company is sitting in those rooms, it means you have a chance to influence how that system is built. So while many people in crypto only focus on daily price movements, there is a much bigger story happening behind the scenes. Ripple is positioning itself as infrastructure for the next generation of financial technology. And this becomes even more interesting when we look at what Ripple is building globally, especially with institutions, banks, and governments that are starting to use the XRP ledger, because this is where the real utility of XRP starts to appear. Now that we understand why Ripple being involved in government and regulatory discussions is such a big deal, the next question becomes even more important. What exactly is Ripple building that has governments and institutions paying so much attention? To understand that, we need to look at the real utility behind the XRP ecosystem. Ripple is not just another crypto project trying to launch a token and hope the price goes up. Ripple has always positioned itself as a blockchain infrastructure company. Their main focus is building tools and financial technology that banks, institutions, and large organizations can use to upgrade the way money moves around the world. One example that shows this clearly is the recent discussion around the Dubai Land Department. There are projects now exploring the idea of tokenizing real estate on the blockchain, and in some of those conversations, the XRP ledger is being used as part of the infrastructure. Now let's slow down and understand what that actually means. Real estate tokenization is the process of converting ownership of physical properties into digital tokens that live on a blockchain. Instead of traditional paperwork and complicated legal transfers, property ownership could potentially be represented digitally and traded or transferred more efficiently. This could unlock liquidity in markets that have traditionally been very slow and difficult to move. Ripple's technology is designed to help support systems like this. The company offers several core products that institutions can use. These include Ripple payments for global transfers, the XRP ledger itself, which acts as the blockchain infrastructure, RLUSD, which is Ripple's stablecoin connected to the US dollar, and custody services that allow institutions to securely store digital assets. All of these products work together as part of one ecosystem. One of the most important roles XRP plays in this system is acting as a bridge asset. In traditional banking, when money moves between different countries, banks often rely on intermediary currencies like the US dollar to settle transactions. This system is slow, expensive, and requires banks to lock up huge amounts of capital in accounts around the world. Ripple's idea is to replace that friction with a faster system. Instead of holding large pools of money in multiple countries, institutions could use XRP as a bridge currency to instantly convert value between different currencies. Because the XRP ledger can process transactions extremely quickly, transfers can happen in just a few seconds instead of days. Another major advantage is scalability. The XRP ledger is capable of processing around 1,500 transactions per second, and with additional scaling solutions like state channels, the network could potentially handle even higher volumes in the future. For comparison, traditional financial networks can take much longer to process international payments, and the cost involved can be significantly higher. This is why many institutions are starting to explore blockchain solutions. It is not just about cryptocurrency trading anymore. It is about building faster financial rails for the global economy. Ripple is trying to provide the infrastructure that banks and institutions can plug into when they want to move money, tokenize assets, or manage digital financial systems. Another important thing to understand is that Ripple executives rarely talk about the price of XRP. If you listen to interviews with Ripple leadership, including Brad Garlinghouse, they usually avoid making any statements about where the price might go. And there is a reason for that. Ripple does not want to be seen as a company promoting speculation. Their focus is building technology and services for financial institutions. The value of XRP, in their view, should come from its utility inside the financial system, not from hype or marketing. Now things start to get even more interesting because this next development could connect the XRP ecosystem to one of the largest financial infrastructures on the planet. We are talking about the DTCC. The DTCC, also known as the Depository Trust and Clearing Corporation, is one of the most important financial organizations in the world. This institution handles the clearing and settlement of an enormous amount of financial transactions every single year. We are not talking about millions or billions here. We are talking about quadrillions of dollars in financial activity flowing through systems connected to this infrastructure. In simple terms, the DTCC is part of the plumbing of the global financial system. Whenever banks, broker-dealers, and institutions trade securities like stocks or bonds, the transactions need to be cleared and settled. That process involves verifying trades, managing collateral, balancing obligations, and making sure everything between parties is finalized correctly. The DTCC plays a massive role in managing this process. Now imagine if blockchain technology starts connecting to systems like this. Recently, there has been discussion about new lending protocols being developed on the XRP ledger, specifically through proposals like XLS66 and XLS66D. These proposals aim to introduce structured lending systems directly on the blockchain, designed with institutional use in mind. Let's break this down in a very simple way. A lending protocol on a blockchain allows assets to be deposited into a pool where they can be used to provide loans. Institutions or users deposit assets into a vault, and borrowers can access those funds through structured lending agreements. The lenders earn yield, while borrowers gain access to liquidity. What makes the XRP ledger proposal interesting is that it is being designed in a way that institutions can comfortably interact with it. The structure involves several key components. First, there are depositors who place assets like XRP or stablecoins into a vault. These vaults act as pools of liquidity that can be used for lending. Then there are loan brokers who manage the lending process and allocate capital from these pools to borrowers. Finally, borrowers receive the loans and agree to repayment terms. All of this happens on-chain using the XRP ledger. But here is where things get really important. Ripple Prime, which is part of Ripple's institutional services infrastructure, could potentially act as an intermediary that connects traditional financial systems to these blockchain lending mechanisms. In other words, traditional financial participants might interact with Ripple Prime as their counterparty, while behind the scenes, the liquidity is being managed on the XRP ledger. This structure allows the traditional financial system to maintain its current operational model while quietly benefiting from blockchain efficiency. For example, broker-dealers could continue clearing trades through traditional infrastructure connected to the DTCC. At the same time, margin requirements, collateral movements, or financing structures could potentially be supported by liquidity pools on the XRP ledger. Think about what that means. Liquidity that was previously locked inside traditional bank credit lines could be supplemented or partially replaced by blockchain-based liquidity pools that could improve capital efficiency, increase transparency, and reduce costs. Another major advantage is programmability. Because blockchain systems can automate processes through smart contracts and programmable logic, lending terms, collateral management, and risk monitoring can be handled more efficiently. Instead of multiple intermediaries managing different steps of the process, much of it can be automated through the ledger itself. This is why many experts believe institutional decentralized finance, sometimes called institutional DeFi, could become one of the biggest financial trends over the next decade. And if systems connected to organizations like the DTCC begin interacting with blockchain liquidity through platforms like the XRP ledger, it could open the door to a completely new layer of financial infrastructure. But this is still only one piece of the puzzle. Because the next development we need to talk about involves something that could dramatically increase institutional demand for XRP, and that is the growing role of XRP ETFs and how they might be used as collateral inside massive financial markets. Now let's move into another development that many people in the crypto world are still underestimating, and that is the growing institutional interest around XRP through financial instruments like ETFs and collateral markets. When most people hear about ETFs in crypto, they usually think about price speculation. They assume that institutions are simply buying exposure to the asset because they believe the price might increase. But in reality, the role of ETFs in traditional finance is much bigger than that. ETFs are often used as financial tools inside massive institutional markets. Large institutions frequently use ETFs as collateral when they need to borrow money, open trading positions, or access liquidity. Instead of posting cash or government bonds as collateral, institutions can sometimes pledge ETF shares to secure credit or margin. Now imagine this happening with XRP-based ETFs. If financial institutions start using XRP ETFs as collateral inside lending markets, repo markets, and derivatives trading, it creates a completely different type of demand for XRP. In this scenario, XRP is not just being bought by investors hoping for price appreciation, it is being used as part of the financial plumbing of institutional markets. Let's break down why that matters. When an ETF is created, the fund that issues the ETF must hold the underlying asset. In the case of an XRP ETF, that means the fund must hold real XRP in custody to back the shares that are issued. So if institutions begin using XRP ETF shares as collateral, the fund must maintain a large reserve of actual XRP locked inside its holdings. This creates something known as structural demand. Every ETF share that is created requires the underlying asset to be purchased and stored. Over time, if institutional demand for these ETF shares grows, more and more XRP must be accumulated by the fund. And because these assets are typically held in long-term institutional custody, they are effectively removed from the active circulating supply. In other words, that XRP is no longer easily available on the open market. This type of supply lockup can have significant effects over time. If demand for the asset continues growing while available supply becomes more limited, the market naturally begins to feel pressure on the supply side. But the implications go even further than that. The markets where collateral is used are some of the largest financial markets in the world. For example, the global repo market alone moves trillions of dollars every single day. Repo stands for repurchase agreement, and it is essentially a short-term lending market where financial institutions borrow money using securities as collateral. Banks, hedge funds, and financial institutions rely heavily on these markets to manage liquidity. There are also securities lending markets, derivatives markets, and various types of collateral agreements that involve massive volumes of capital moving through the financial system. When an asset becomes widely accepted as collateral, in these environments. It essentially becomes part of the financial infrastructure. This is what makes the possibility of XRP ETFs being used as collateral such a big deal. It means XRP could begin to function as a financial building block inside traditional markets rather than just a digital asset traded on crypto exchanges. And when you combine this with Ripple's broader strategy, working with banks, governments, and financial institutions, you start to see a bigger picture forming. Ripple is not just building a cryptocurrency ecosystem, they are building financial infrastructure that could connect blockchain technology with the existing global financial system. But the story does not stop there. Now that we've looked at Ripple's connection to US regulators and the potential of XRP ETFs as institutional collateral, it's time to zoom out and see the bigger picture, Ripple's global reach, because this is where the full impact of XRP and Ripple's technology starts to become clear. Ripple has been strategically building partnerships with some of the largest financial institutions around the world since 2016. Banks like Bank of America, Santander, Westpac in Australia, Royal Bank of Canada, and Tokyo Mitsubishi are already connected to Ripple's ecosystem. This isn't just a list of clients, it represents a network of institutions that can use Ripple's blockchain infrastructure for cross-border payments, tokenized assets, and liquidity management. One key element of this ecosystem is RLUSD, Ripple's US dollar-backed stablecoin. RLUSD is designed to provide compliance, transparency, and programmable financial operations on the XRP ledger. Think of it as a bridge between traditional money and blockchain. Institutions can hold RLUSD as a stable asset while using XRP for high-speed transfers, liquidity, or as a bridge asset between currencies. For example, in Europe, Ripple's partner, Amina, is now actively using RLUSD and Ripple payments within regulated digital trading systems like 21X. They are tokenizing assets, offering custody, and providing regulated secondary market trading. This creates a full end-to-end pipeline. Banks can hold custody of tokenized assets. These assets can be issued on-chain and then traded in fully compliant markets. This is a huge development because it shows that Ripple isn't just experimenting with blockchain. They are actively integrating it into real-world financial infrastructure. XRP and RLUSD are not just cryptocurrencies. They are becoming functional financial tools for large institutions. And the global scale matters. By being connected to multiple financial hubs, North America, Europe, Asia, and Australia, Ripple is positioning XRP as a neutral bridge asset that can operate across borders without relying on a single government or financial system. That's extremely valuable because global payments are still slow and expensive. Institutions need speed, efficiency, and liquidity, and Ripple is providing that. Another reason this matters is institutional adoption. When banks, broker-dealers, and large asset managers start using XRP and RLUSD, it increases the credibility and trust in the system. Adoption by large institutions creates a feedback loop. The more these tools are used, the more efficient the network becomes, which encourages even more adoption. We also have to consider tokenization. Beyond cross-border payments, tokenization of assets like bonds, real estate, and other securities is becoming a major focus. Ripple's infrastructure, combined with XRP's speed and RLUSD's compliance, creates an ideal foundation for institutional-grade tokenization. For example, European banks are exploring tokenizing bonds using XRP Ledger, while Ripple payments is already being used to settle cross-border transactions in a regulated environment. All of these developments indicate that XRP is moving from speculative use cases to functional adoption. The focus is not on the daily price of XRP, but on how XRP can actually move money, settle trades, and act as collateral in regulated systems. And here's why that could be a game changer for holders. As more institutions lock XRP in custody for operational purposes, it reduces the available supply in the market. When supply is limited and demand continues to grow, it creates the conditions for long-term price stability and potential growth. So, after everything we've discussed, government involvement, Ripple's presence in regulatory rooms, DTCC lending protocols, XRP ETFs, RLUSD, global adoption, and institutional tokenization, what does it all mean for XRP holders and the crypto ecosystem as a whole? The key takeaway is this: XRP is no longer just a digital asset people trade for speculation. It is increasingly becoming a functional, institutional-grade financial tool. Ripple has spent years building relationships with regulators, banks, and global financial institutions, positioning itself as infrastructure that connects traditional finance to blockchain. This is a massive advantage that many other cryptocurrencies simply do not have. Think about it like this. Ripple is in the room where decisions are made, both in Washington and globally. They are helping design the rules of the road for blockchain. At the same time, they are actively implementing real-world solutions, tokenizing assets, providing stablecoin liquidity, and enabling instant cross-border payments. This combination of strategic influence plus functional technology is extremely rare in the crypto space. Institutional adoption is the second big factor. Banks and large financial institutions are not just experimenting with Ripple, they are integrating it into their operations. With projects like Amina in Europe and Ripple Prime interacting with DTCC infrastructure in the US, XRP is being used as both a bridge asset and collateral in large-scale financial operations. This creates structural demand, meaning XRP is locked in systems and wallets that are unlikely to be sold on a whim. When supply is effectively reduced and usage grows, it can support both long-term stability and potential upward price movement. Another important point is the use of XRP ETFs as collateral. This is a concept most retail investors don't fully understand yet. When XRP ETF shares are used as collateral for lending, derivatives, or repo markets, it creates persistent demand for underlying XRP. The more institutions adopt XRP ETFs as operational tools rather than speculative assets, the more XRP is required to back them, further reducing available supply and circulation. Over time, this has major implications for liquidity, market dynamics, and the structural value of XRP in financial systems. The global perspective matters too. Ripple's network spans North America, Europe, and Asia. They are enabling cross-border payments, stablecoin liquidity, and tokenized assets in regulated environments. By creating these global connections, Ripple is positioning XRP as a neutral, efficient bridge asset that can move across borders without relying on a single government or financial system. That level of global adoption and institutional trust is incredibly rare in crypto. Now let's talk about what this means for holders. Short-term price movements may still fluctuate, and XRP will always experience market cycles like any other cryptocurrency, but the big picture shows a trend toward real utility and structural demand, which is far more important for long-term growth than daily price speculation. If you are an XRP holder, paying attention to these developments is key. Understanding how XRP is being adopted, how ETFs and institutional lending protocols work, and how Ripple interacts with regulators can give you an edge in evaluating the long-term potential of your investment. This is the type of strategic information most casual investors don't see. To wrap up, the combination of government relationships, global institutional adoption, stablecoin integration, tokenization projects, and XRP's unique technical capabilities puts Ripple and XRP in a position few other blockchain projects can match. We are witnessing the early stages of a system that could become foundational to both digital and traditional finance. Thank you for joining me on We Are Cosmic. If you found value in this analysis, make sure to like, comment, and subscribe. Share your thoughts below. I want to hear what you think about XRP's future, Ripple's global strategy, and how institutional adoption might reshape the market. And remember, we focus on providing clarity, insight, and perspective so you can navigate the crypto world with confidence. Until next time, keep looking beyond the price charts, focus on the real adoption and utility, and stay cosmic.